Hi and welcome to today's Morning Report on Thursday the 18th of February with me, Rich Pro Market Analyst at Tech Markets. We've got a fairly mixed start on the European Open. It seems as though that these markets have been driven by oil in recent days, but the oil price is higher today, but markets are fairly steady. Is that sort of the beginning of the end of a correlation? It's interesting to see whether that will be the case, but since sentiment generally seems to be fairly mixed today, despite that oil price rally that we've seen continuing. The talks between OPEC and Russia and sort of whether Iran is going to be involved in a production freeze or not. It is basically Iran paying lip service, I think, to the whole situation, and they're not going to freeze production, and they're going to continue to ramp up as they re-enter the market from that period of sanctions. But at the moment, the oil price is rising, and I think that it's just a bit of unwinding of short positions, really, rather than a sustained rally. Let me show you the oil price on WTI. And not only that, you've got a 3-month downtrend on WTI that's basically now being tested, isn't it? It's been really tested today. And just falling away from that. So is that interesting? It could be. The fact that oil is just sort of coming up to that downtrend and just backing off a little bit. We'll see how this one develops. In terms of the Fed last night, the minutes, the minutes showed that the Fed is sort of backing away from its hiking cycle. It said that it was sort of contemplating moving away from the rate hikes of 2016. It was concerned about the impact of global tightening financial conditions tightening. And that certainly all plays into the fact that the dollar is not going to be able to engage in this bull run anymore, I don't think. And that, I think, is sort of reflective of what we're seeing today. We're seeing this dollar rally that we've had back towards, this is the trade weighted dollar, back towards the old resistance of the December lows, is sort of capping that high. Interesting that is a resistance coming in now. So that little unwinding move that we've seen in the last few days could well start to roll over. Now, in terms of what we've got to look out for today, well, we've got not really a great deal until the US session comes back into play, really. We've got the jobless claims at 1:30. And that's expected to be 275, so again around about where we've seen it in the last few weeks. Also at 1:30, this will be interesting, the Philly Fed Business Index. This has been negative for the past few months. This is sort of playing into the whole fact that the regional Feds, the Fed regions, if I can get my words out, are contracting, or certainly not growing as much as they were. They're below trend growth, so these negative readings that we get on these Fed surveys are negative for the prospects of continued growth. And that is expected to be -3 again, so another negative number there. The oil inventories report could well have a volatile move on the markets. And you'd look out for the expectation of an inventory build of 4 million barrels again. So again, that wouldn't be positive for the oil price. But it'll be interesting to see how that one in fact plays out today. Now, my charts today. I've had sort of a few requests recently to do silver, and it's interesting. Silver is an interesting chart at the moment because it's sort of quite similar outlook to gold. It's sort of had this sharp rally and retraced, and it's now using the fib levels as the sort of consolidation area. 38.2% providing the floor, 23.6% providing the ceiling. Not only that, that's, if it plays out, could be a head and shoulders top pattern. We'll wait and see how that one moves. Now, you've got this uptrend still intact on the RSI, but it's coming back to that uptrend. It's sort of beginning to test it. The MACD line's coming together. Stochastics are still falling, so it is sort of playing out this consolidation over the past few days, but it is putting pressure potentially on that 1506 reaction low, which is that move from the 10th of Feb. Just prior to that sharp spike higher, the retracement back towards that level provides the floor now. So that is a key support near term that we need to account for, and you can see that here on the hourly chart, where it's sort of was a breakout level as well, 1506. So that is a key level that we need to look out for. Look at this consolidation in the past sort of 2-3 days between sort of 1542 and 15 and 1510. So 2% worth of sort of consolidation there, buzzing around that level. Momentum indicators on the hourly chart pretty much neutral now. RSI between 40 and 60, MACD lines back to neutral. So there is a consolidation going on, but it's just, as I said, there is a possibility of this sort of momentum just rolling over on this chart now, and that would be probably driving the completion of that head and shoulders top. So that is the concern, and that if that were to happen, certainly the correlation between silver and gold that we've had recently would suggest that gold would be breaking down as well. So perhaps silver could be a driver of weakness on gold, but it'll be interesting to see how this one pans out. Anyway, I wish you good luck in your trading today, and I'll speak to you later. Thank you.